weekend all. Ira Epstein of Linn Associates with your financial market wrap-up, and this is your weekend edition for Friday, the 15th of May, 2020. So, what an interesting week. We finished off with the stock market basically under pressure this week, which is an interesting time because if you think about it, America's putting its factories gradually back online. So you would think that would be a better time for the market. Silver market exploded, could be industrial demand. Copper was pretty flat, but the platinum market and palladium market were very strong. We had filled the gap in the Bitcoin and the market, and we did that yesterday as the market approached 10,000. It's come back quite a ways off that on a drop. Bonds and notes, as you know, if you're watching the daily videos, I'm telling you, they're caught in this narrow band of the Bollinger Bands, and you just get whipped in that type of action. In the energy market, much stronger than I thought they'd be. So that is not a bad thing. That puts flooring, and it's an important part of our economy. I don't want to see it break apart. And remember, we have June deliveries coming up very shortly. I told all our clients in my firm they cannot be in the June contracts of the crude. If they are, I wanted several $100,000. Now, some people might say, why that much? Well, I saw $40 negative. I don't know what it's going to do. It's not my job to do that. If you want to trade it, fine. Your job's to protect me. When you take a look at the E-mini on a monthly basis, all we did is rally back last week to the 18-month moving average on a monthly chart and ran into some resistance. Get over that, and all of a sudden you could be arguing you'd have higher highs and then a higher low, but you don't. Right now what you have are lower highs and a lower low. So the market is still in a downtrend as far as I'm concerned on just a closing basis. When I look at the market on a weekly area chart for the bigger picture, I want to put some Fibonacci numbers. So I take the high and the low, and all I've had is a 50% correction. Unlike the NASDAQ, this market did not on the daily charts take off. The NASDAQ, we know, exploded, not this market. Now, it also hasn't done any damage on a closing basis to the bull's case that maybe the rally continues. But resistance above it at 29.45. And how many analysts have we heard talk about the 29.50 area on financial TV? It's one after the other. When we go on the bar chart, we see a little different picture than we do on the closed chart. On the bar chart, you made a 62% retracement, and now you're pulling back into that 50 percentile area. When we take a look at the swing line, they're still bullish. You still have a pattern of higher lows and higher highs. So that's not a bad pattern just yet. When I take a look at what the market went to, it ran into a buzzsaw right here at that 18-week average, and for the week it's down to 82 points. So going home, the market did not give the bulls what they wanted. The bulls wanted this market to close over that number, that 29.65 level. Didn't do it. In terms of Bollinger Bands, they're not in play. One of them's way up here at 35.44, the other's at 23.46. They're just not mattering. It's more moving averages than anything else. In terms of momentum, momentum is flattening out. It had been pointing up, now it's starting to flatten. Can't get a signal out of that. Now, if the market this week starts breaking down under this 27.71 level, I'd get a bit nervous. You could end up with the lower highs, lower lows on that, and that turns the trend back down. In the NASDAQ, you have a momentum pointing up. You still can argue you've got the higher low, higher high pattern. You've done no damage to this chart. And on a weekly basis, I don't see how you can do damage. You can neutralize the bull trend by getting under 85.56 and a quarter, but nothing can turn it bearish. If the market were to take off, well, then I'm looking way up here at the 10,012 level. In the Dow, actually, my numbers are wrong here. I'm looking at it and I should get rid of these. I can put on the market lower highs, lower lows. The trend turned down. Until you take out 24,792, the market failed against the 200-day average. And if it starts down, maybe this is where the market tries to grab that traction, where so many of us that are still thinking that you don't end a bear market with that and you come up like this. I am in that camp. I've never seen a bear market end this way. It doesn't mean it can't. But it's bothered me all the way through, and I've been around this 50 some odd years. They generally don't end like that. In the Russell, take off these numbers too. You now should have your down arrows pointing here. Sometimes I like to make the mistake of leaving them on. You learn. Lower high, lower highs, lower low. Bear trend under the 18-week average. You could be putting into play the lows again. What would negate this? Taking out this week's high, this coming week or the week after would negate it. Same in the Dow. We then get to the VIX. The trend has been down. Lower highs, lower lows, and still down. Momentum pointing down. So there's a fight going on here. In order for those markets to really get bearish, the VIX should not be in a downtrend. When the VIX is in a downtrend, it says that risk factors are mitigating. People aren't worried about risk. In the 10-year note, on the weekly chart, you still very much have the higher lows, higher high pattern. You don't see this on the daily. You see it on the weekly. If the market can now get back up and clear 139.22, it might mean a breakout on the daily charts as well. So I'd be watching that number. What about to the downside? Even if you take out 138.08.5, you don't necessarily start a downtrend, or do you? Well, the swing line would turn down because you didn't take out 139.22, so you'd have lower highs, lower lows if you don't make a higher high, but because you're over the 18-week average, the bias stays up. In the dollar index, we have a market here that's got a pattern of right there, coming down to a new low and getting the bounce. That's all that it is. It's not trending one way or the other. Eurocurrency, while the daily charts look ugly as can be, the weekly charts still have higher low, higher high. Admittedly, they're countered because you're under the 18-week average with downside bias, and you certainly have downside momentum. The market gets into a full-fledged bear if you take out 107.74. Then you'd have lower highs, lower lows, putting into play the potential for the lower Bollinger Band, which is going to be in the 106, maybe 30 to 50 area. In the Canadian dollar, we're still with the pattern of higher lows, higher highs, momentum flattened on us, and we have downside bias. The currencies have not gotten into real trends in a very long time, and that's unusual. In the Japanese yen, the daily charts are bearish and the weekly chart is bullish. You still have higher lows, higher high. You don't want to fight with that. Bitcoin fell back this week to the 18-week average of closes and held. Now on the daily chart, if you looked at a gap on it, and I showed you this Monday through Thursday, the market managed to rally, fill that gap. On the weekly chart, you're bullish. You have higher lows, higher highs, key support 83.16. You are with upside momentum. Remember, we don't look at overbought, oversold on a weekly chart. Look at this differential that is caved in on Brent WTI. You've gone from $9.81 back to $3. Remember, this is the April time frame. I don't want to give you the impression that was long ago. So they're really bringing in the differentials here. When we look at Brent, it's a nice rally, but you haven't taken it out of a downtrend. You still have the pattern of lower highs, lower lows, the bias down. Where the difference is momentum has turned up. So the market, now we have divergence. We have the divergence of momentum pointing up and prices fighting it. WTI crude, a different picture. You were able to clear these highs, so now you're at 28.36. This was that $40 negative. I saw the CFTC come out this week. They have threatened the markets. They're not going to let this nonsense happen again. I do think that was nonsense, by the way, but I understand the nonsense. Who wants the crude if you can't store it somewhere? Remember, that's a physical delivery commodity, not cash. So now that the market took out 28.36, you ended this leg down, you have not begun an uptrend. That ended that leg to the downside. Rebop gas, higher lows, higher highs. So on the weekly chart, pointing to the upside, could be we're going back to the 109.40 area. Momentum up, but it's not bullish enough because when the bias is down and the swing line's up, it is not a true buy signal. So you put it together, you try to come up with game plans, and that's what we do each morning for you. You know, I get up at about 4:30, read for about 40 minutes or so, and then I start getting ready. And by the way, I read a lot of my news on my phone, just like you do. I read our QT news. I'm on Bloomberg, Fox, CNBC, Financial Times. I can go on and on. Market Watch, investing.com. There's a whole slew of them that I read, because I'm looking for writers and comments of people that I like, and I look to see what they're saying. I cover 40 charts. I give you a touch of the fundamentals in the morning. I'm going to bring you up to date with what happened in Asia, Europe, and what the reports are this morning. I'll give you my trade ideas for the day with entry, exit, stop ideas. Some will be crazy risk, some will be very low risk, and I'm going to cover the markets in this exact sequence. Remember, there's 40 charts. You jump around, there'll be a slide bar. As you slide, it'll light up what section you're in. Couldn't be any easier. Makes it really simple and fast if you're not looking to look at a 20-minute video. The first 30 days, $7.95, no contract with us. You decide if you want to stay with it. All you need to do is go to our website under the word research. It explains it all, and that's where you sign up. I'm Ira. You have a great weekend. I'll talk to you on Monday.